Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, which is one of my passions. With our 21 SPY and ES mean reversion systems with about 90% winning trades, and of course our amazing KISS systems, trend following systems, which we've had live for about a year and a half now. And anyway, we'll get back to that, but let's go ahead and get to this newsletter market video at hand. This is our backend recorder for our standard website subscription service. I'm going to go and get that started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, July 29th newsletter. As you know, Steve Nelson did the extensive weekend newsletter, and so I'm going to cover quite a few charts that he did. And you can see this newsletter is divided into 6 major sections. We have the opening statement, which I'm doing right now. Then I'll go over some of these mean reversion type systems. Then we'll move to the general market indexes. Look at the Dow, S&P, NASDAQ, Russell 2000. We'll look at some various indicators. We'll look at bonds. 10-year treasury yield, as well as TLT 20-year bonds. We'll review a few major sectors. Again, Steve covered all the sectors in the weekend, so not going to spend too much time on that. We'll look at the US dollar, crypto, Bitcoin, commodities, precious metals, GDX, that's the gold miners, and also we'll review some trade ideas. That said, guys, as far as trade ideas, not much out there. I ran all my scans. I also have a couple other subscription services that once in a while I reference to look for some ideas. And quite honestly, I mean, on the long side, very, very slim pickings. So when things are like that, I don't want to force the issue. All right. This week, guys, we got a lot of issues. We got a lot of things that could move the market. All right. First off, earnings. As you know, we're in earnings season. Microsoft is the big one tomorrow, as you know. Okay. It's going to be not their earnings, but it's going to be the reaction to the earnings. So we'll see how the market reacts to that. We also have AMD, so Microsoft and AMD on Tuesday. Obviously, there's plenty of other earnings, but those are two of the big ones. Meta on Wednesday, Amazon and Apple on Thursday. So besides earnings, we also have quite a bit of news items. We have the FOMC on Wednesday, ISM, as well as jobless claims, and of course, the big non-farm job payroll report on Friday. On Wednesday, the FOMC, at least right now, I'm kind of leaning that Powell may be a bit dovish. Maybe that'll produce a market bounce, but we'll see. Anything goes. And another thing, it seems like there's so many things here on the docket. This week is TGA funding for the government. And also, futures are down here a bit after hours. Part of that is being blamed on a potential coup in Venezuela, but whatever. Again, really tomorrow, big focus on Microsoft, FOMC on Wednesday. All right, let's go and jump into things. So first off, let's talk about the trading systems. First image below, item number 2. This is from the KISS systems. This is just looking at the BPT basket. Remember, we have all these various baskets. We run the KISS systems on 750 stocks and ETFs. You could also search. But anyway, this is just the BPT basket where I have some major ones. Anyway, as you'd expect, with the recent market correction, many of these are flat. So the KISS systems are doing their job. They keep you protected. If this were to turn into a much larger correction, most of these are out, right? A couple things still long. AT&T, it's up about 11%. TLT's up, or is long, it's down 0.5%. BYM, IWM is long, it's up about 10.25%. Otherwise, everything else is flat here. Again, should the market go to new highs, remember these systems will just get right back in. But the beauty of the KISS systems, they keep you in uptrends, they raise the stops, so you're able to protect those profits and not give up a bunch whenever the correction goes. And you don't have to go through big market corrections or bear markets. Okay. Next, let's talk about the volatility systems. So first off, I'm not showing the SPY and ES mean reversion systems tonight. There was no changes. None of those have exited yet. So should we get a bounce tomorrow or Wednesday, we might see some of those start to exit. Now, I've been showing some of these volatility systems, and the DIA, this one had a first and second entry last week. It closed out on Friday. It was actually a very nice trade. The other ones that were open are the Qs volatility system and SPY, and those have not closed out yet. Again, they need further upside. These trades sort of like mean reversion systems, but they're based on the volatility instruments for that respective instrument. For example, for the SPY, it's using the VIX with the Bollinger Bands. When you outside the upper Bollinger Bands and close back inside, that'll give you longs. When it's below the lower Bollinger Bands, close back inside, that gives you shorts. The DIA uses the VXD, that's the volatility index for the Dow. For the Qs, it uses the VXN, that's volatility index for the Qs. And EEM, emerging markets, that uses VXEEM, volatility index for emerging markets. Again, right now, at this moment, I've just been posting these on our trading community and in some of the newsletters, but officially I haven't added these to the website. I don't send out trade notifications for them yet. Again, I've been posting them, but I will eventually add these to the website. I'm making a few changes, and I'd like to have it completely automated, just like the KISS systems. So, they could automatically email you whenever these volatility systems do a trade. Okay. Next, here's the trade statistics of that DIA volatility system that closed out on Friday. And again, I posted that on our trading community on Friday for those who may have followed it. But profit factor, 20.5, excellent. Total number of trades, 149, 86.6% winning trades. Again, these tend to be short-term, guys. Average time in trade, 4 days, 16 hours. So, again, that's typical of mean reversion. They're not in trades that long. They find an entry, they get in, they get their move, they get out. And nice profit curve. So there you go. Next. Moving back to the general market newsletter. So item number 5 shows the index sector table, what transpired today. Again, basically a choppy consolidation day today. Some bifurcation with the S&P and NASDAQ just slightly up, while the Dow was down, and especially the Russell down 1.1%. As far as the 21 market sectors that we cover, kind of a 50-50 mixture of up and down. Obviously weakness in the energy, financials, tech, banks, whatever. But some strength in some of these other areas like utilities, drugs, real estate, home builders, consumer discretionary. A lot of these are defensive. Now, home builders and real estate have been moving up in anticipation of some future rate cuts. Okay, that's how things tend to work. Stocks tend to anticipate things and they rally ahead of time. That's why you get the buy the rumors, sell the news. So anyway, they've been running up ahead of that. Currency-wise, US dollar up 0.3% today. Cryptocurrencies, Bitcoin down about 1.3%. But again, nothing changed in the bigger picture with that chart. As far as the commodities, the DBC, that's the index, was down 0.5%. Crude oil down 1.75%. That continues to strongly leak oil. Pun intended, I guess. I don't know. Natural gas down 0.75%. But I do think this may soon provide another trade. There's a pretty nice divergence, which I'll show you later on. Copper down 1%. Uranium down 1.8%. Agriculture down 1.1%. I mean, what we've been seeing in the commodities, guys, I think is indicative of, maybe some worldwide economic slowdown, especially in China. But, it's coming here too. We're eventually going to get a recession, and so we're starting to see this with the commodities. Precious metals, now gold was up pretty strongly today, up 1.89%, while silver was down 0.5%. GDX, the miners, were up 0.4%. Gold ended up holding that demand zone I showed last time. And as far as the bond market, about a 0.5% pullback in the 10-year, 30-year Treasury yields. Next, Item number 6 shows the economic news calendar, which I already discussed. Like I said, tomorrow, the big items are Microsoft and AMD earnings, okay? Especially Microsoft. FOMC is your next big one on Wednesday. Next. Chart number 7, here's Microsoft. Like I said, so far, nice healthy correction from the July highs where it pulled back from. This is a top of a demand zone where we have bounced initially. One way to look at it, the bullish way would be an ABC. And we've got a little bounce. We're still below the 90 MA. But like I said, earnings are tomorrow after the close. Chart number 8, here's AMD. Now AMD, man, boy. This also reports tomorrow, by the way, after hours. But remember, we had it as a long idea back here in early July on this channel break. And it gave you a nice trade to our target area, which is the supply zone. And if you didn't take profits in the supply zone, man, the price got basically pimp slapped down from that supply zone. And now it's back to another longer term demand zone down here. So we'll see what it does. These supply and demand zones are extremely effective, guys. Look these up, Google them, but start utilizing these instead of just simple horizontal trend lines. These are very effective. A lot of the pros these days use supply and demand zones now. They trade between them. Next, chart number 9, here's Meta. This reports on Wednesday, July 31st. Okay, it did bounce off this little demand zone. So far, tagging the 90 MA. Chart number 10, here's Apple. This reports on August 1st, Thursday. Now, this is pulled back into a demand zone. You're above the 50-day moving average, so we'll see if it can find some support in here. And chart number 11, here's Amazon. This also reports on Thursday, August 1st. You can see it too pulled into a demand zone where we got an initial bounce. So we'll see how the market reacts to these earnings, these big cap stocks. And let's move on to the indexes. Chart number 12, here's the Dow. Again, the Dow is only 30 stocks, but we've been covering it lately. Remember, nice breakout from this coil back in early July. Broke out, new highs, pulled back. Previous resistance became support. We've bounced off of it. The question is this a wave B lower high and we come down again? We'll see. But otherwise, quite strong. Next, chart number 13, here's the S&P 500 KISS daily system. Remember, this exited the previous week. Okay, it is in cash. Now, this is the custom version. The one on the website actually exited a week before at much better prices. All right. Anyway, nice pullback from that DeMark 13. That's the DeMark counts in yellow, in case you're wondering. And they're not perfect, but they've been pretty decent. You can see nice, just 913 DeMark combos over the last few months, and they've all produced pullbacks, especially this one. Next, chart number 14, here's the 4 time frames we like to follow. First off, here's the daily, which we just looked at. Now, last week on Friday, we had a little buy cycle, which so far we've bounced from. And on the half day, we bounced as well from that buy cycle last week. Again, we're below the ATR on all these time frames, guys. We need to recover at least on a couple of these time frames. You can see even on the 78-minute, we're still struggling here at the underside of the ATR. And we do have, this is marked as a resistance cycle bearish rally. So definitely work to do. Next, moving back to the standard charts, here's the daily S&P 500, just a nice clean chart going back to last fall. Here's a parallel channel, and so far we're around this 50-day moving average. Moving average ribbon is pinching. It's still bullishly stacked for now. And this lower trend line would be a big support on another move down. And honestly, the bulls, and Steve talked about this on the weekend, you really don't want to lose this area for the bulls around this 5260 area. That would create an overlap on a bullish count, so be aware of that. But we're still in the channel. We're around the 50-day moving average. We'll see how the market reacts to earnings and, of course, how the market reacts to Powell on Wednesday. Next, chart number 16, here's the other daily S&P 500 chart. Steve discussed this on the weekend. I've showed it a few times as well. And this would lead to a larger pullback. This wedge pattern, all right, would lead to eventually another move down. We still favor that as a larger wave 4. Okay, but that could go down to the lower 5200s quite easily before recovering. Next, chart number 17. Here's another daily chart of the S&P. Again, one thing that bothers me, we didn't quite fill that open gap on the cash last week. If we had filled that gap, I'd feel a bit better. But anyway, so if we come back down, that's obviously a magnet, and there's another little demand zone down here. Next, chart number 18. Here's a 30-minute view of the S&P. Steve showed in a week, and again, just a nice clean downtrend channel we're in. You can see we're now coiling within the channel. So a bigger move's coming, guys. We either get a flush down here, or maybe we get a pop out of here. There's also this open gap up here. Should we get another move to the upside, I would favor possibly filling this gap, maybe get up to this supply zone. By the way, if we do that, that would allow a lot of those mean reversion systems to exit for nice trades and profits. Next, chart number 19, here's the 60-minute chart just showing the same channel. We had an uptrend channel, which we lost back in mid-July, and we've been downtrending in the channel. Chart number 20, here's a half-day or 2-hour chart, just showing the same channel as well. You can see the moving averages here, big resistance area. Chart number 21, here's a clean half-day chart showing that gap, which we didn't fill on the cash. Okay, and you can see some of the other levels below. Chart number 22, 60-minute or 2-hour view. A bearish way to label this would be this is a wave 3 still, and this is a wave 4 bounce, and we go down on a 5. Chart number 23, here's a 60-minute chart, again just showing this coiling type action. And chart number 24, here's a 15-minute chart. Like I said, you can see this coil that is forming. So likely we're going to get a sharp move out of here maybe tomorrow. Again, we have a bunch of earnings tomorrow. Moving on, chart number 25, here's RSP. That's the S&P equal weighted. As you know, this has been very strong. You had an absolute textbook coil pattern. If I was writing a book on technical analysis, this might be a chart I would show for a coil. Just beautiful coil. Broke out of the coil, pulled back, kind of at a flag action wedge into the 20-day moving average, and we bounced. If you're long RSP, simple swing stop would be at that higher low at 166.95. Chart number 26, there's the 60-minute chart. You have 3 waves down. We filled one gap. We didn't fill the other gap. Next, moving on to the NASDAQ. Here's the NASDAQ KISS system. Now, this one had a great exit almost 2 weeks ago. So you can see it locked in those profits. It's allowed you to avoid this correction. Now, you can see the highs were to mark 9, where we've had a nice pullback. We have it to mark 13 now. So that's something to note. This thin green line, this is the weekly ATR. We're always talking about the daily ATR. This is the weekly. So we got pretty close to that weekly ATR. Now below that you have the 200-day moving average. Clearly the the Qs or NASDAQ area is so much weaker than the S&P. Look at your moving average ribbon. While the moving average ribbon is still bullishly stacked on the S&P, BPTMA has went below the ribbon here on the Qs. Next, chart number 28, here's the 4 time frames. Again, here's the daily upper left. You can see the mark 13 today. ATR is your resistance on all these time frames. Need to recover that. That's the bulls need to recover, even on the 78-minute there. Chart number 29, here's the triple Qs daily. Again, nice pullback. We remember there is an open gap up here. If we can get a rally going, that could be a target even if it ultimately forms the lower high. We did bounce last week off that weekly demand zone that Steve discussed on the weekend newsletter. Chart number 30, here's the triple Qs daily, and this is a zoomed out chart. I don't know if Steve showed this on the weekend, but first off, you can see this uptrend line going back to essentially January 2023. Okay, so very long uptrend line. And there I also have an uptrend line connecting the late October lows of last year, to the April lows. So we didn't quite make it to that. That could be a target, all right? Otherwise, if this were to be strongly lost, your next targets would probably be the 200-day moving average and this uptrend line from January 2023. That said, a couple concerning things are symmetry. So the point value pullback from that 2023 fall correction was about 45 points. The pullback in April was 36 points. This pullback is about 48 points. So this is the largest point value pullback in this entire uptrend. That is a symmetry break. That gives you stronger odds that the next rally forms a lower high. Okay, here I added a little trend line. That could be a resistance area as well. Now, as far as a percentage move, it hasn't had a percentage break, symmetry break. For example, I think the pullback back here in last fall was around 11%. This is around 9.5%. So you don't have a symmetry break on percentage, but you have it on nominal point value. Next, chart number 31, here's SQQQ. That's the triple inverse ETF for the Qs. Remember, I put this out a couple weeks ago when it was inside this coil on July 16th, and boy, did it ever provide an excellent trade, especially if you took profits last week. That said, it still looks quite constructive here. So, depending on how the market reacts, this could easily pop again, perhaps. Again, it's all going to be dependent on the reaction of those earnings. Next, chart number 32, here's 2-hour chart of the triple Qs. Again, just downtrending, lower highs, lower lows. So the bulls need to break out of this channel. There's a gap down here. There's a couple open gaps up here. Filling this open gap would be a target on a first break of this channel. Chart number 33, here's a 2-hour view. Now here you have 5 waves down. This potentially shows more of a bearish impulse down. So that's something to be aware of, guys. Chart number 34, here's a 60-minute chart just showing the same downtrend channel. And you can see we're coiling within the channel. So likely a pop of some sort is coming here. Chart number 35, here's a 30-minute view. You can see this coil forming. All right, guys, that does it for the major indexes. Let's go ahead and move on. Oh, actually, no, we have the small caps here. So here's IWM. Remember, they were down 1.1% today. They continue to still struggle around the supply zone. Obviously, a beautiful rally out of that tight coil that we had in place well in advance. Chart number 37, here's the daily IWM small caps. Again, beautiful, absolute textbook coil there. This is a demand zone. You could have went long this back in June, July when we had this. Anyway, or you could have waited for the trend line or the breakaway gap over the coil. Whenever you have a coil or whenever you have a trend line and you gap over a resistance trend line on increased volume, that is what you call a breakaway gap. Those are gaps you can chase. I know a lot of you may be programmed not to chase a gap up or something. And many times that could be true, but on a breakaway gap, those are gaps you can chase. They do not typically fill that gap for quite a long time. So those are gaps you can buy. Clearly, again, it was better to go long inside the coil or in the demand zone, but you could have chased that gap. Anyway, pull back today. We're still above that 9 EMA, obviously, on the daily. Chart number 38, here's the 2-hour view. I didn't update this one, so I'm kind of wondering if this is a wave B up and maybe you get a wave C down. We'll see. All right, that does it for the indexes. Let's go and move on. So here's the VIX volatility index, slightly up today. So the VIX, as you know, was basing here for a couple months, so it's had a nice move up. And generally, when I've talked about it here in the comments, usually the first close inside the Bollinger Bands is maybe only a temporary buy or bounce, because usually it moves up at least 1 or 2 times above the upper Bollinger Bands. So it moved a second time above those upper Bollinger Bands, closed back inside last week. You had some RSI divergence there to support that pullback. Next, chart number 40, here's the 10-year Treasury yield, down 0.5% today, basically retesting that 61 fib. Chart number 41, here's the weekly view. Let's see if this ends up breaking the coil to the downside. Chart number 42, here's TLT 20-year bonds, absolute textbook coil here. This looks like a long, guys. If this breaks up, then the 10-year would go down, and maybe that'll help the market on the next rally up. Okay. Now, a way to play a move higher in the TLT, if you want to leverage play TMF, that's the triple ETF. It's got a coil-like pattern here, so there you go. Next, chart 44, here's the S&P 500 versus high-yield corporate bonds. And interestingly, high-yield corporate bonds have been holding up here much stronger than the general market. You can see making higher highs while the S&P is sold off. Chart 45, here's the yield curve, the 10-year divided by the 2-year. Again, this has started creeping up as I commented last week. Now, it was down a penny today. It's at 0.95. It's been inverted for over 750 days, the second longest in history. The previous longest was from the 1920s, before the Great Depression. So anyway, eventually, guys, when this goes back above 1, I think we'll start seeing our official recession. And chart 46, here's the unemployment rate. Remember, we have the jobs report on Friday. And remember, guys, to me, the bar just turned on this. This is going higher over time. Okay. Again, just a very simple chart. This is a monthly chart of the unemployment rate. It uses the 5 and 9 exponential moving average crossovers. And the reason why these work effective is because you can see when moving averages tend to cross, you get trends that last at least a couple years, if not 4 or 5 or 8 years. See that? This never just go, when it changes direction, it never just reverses back. It's kind of like, it's like turning a big barge, big aircraft carrier, right? It doesn't turn on a dime like a sports car. So the fact that this crossed up months ago, I think the new norm, this will be now trending up for the next several years. And of course, that'll correspond with the next recession. And also, probably there's some sort of correction in the housing market as the job market, employment rate goes higher, people lose jobs. That'll force more supply on the market. Let's be honest, guys, what has kept this crazy housing market afloat is all the folks like myself who have, 2.75% 30-year mortgages. You don't want to give that up unless you absolutely have to. If you move for a job, which is rare, or, if you lose your job and you have a foreclosure. Well, if unemployment goes high enough, that could start causing that, and that would increase the supply on the housing market, and hence prices would go down. Anyway, let's follow up on a few market sectors. I'm just going to cover a few of them here. Here's XLK Technology. Again, pretty strong correction, also a symmetry break. Got near that uptrend line last week, bouncing a little bit, but still quite weak looking, below these moving averages. Chart 48, here's the semiconductors. Again, a little bounce last week off of the 61 fib, but still looks quite weak here. Clearly that last high had a nice MACD divergence, which is played out. Chart 49, here's the banks. Bank sectors have been very strong lately, but there is some divergence here. Chart 50, here's the regional banks. KRE, Steve pointed this out, said it looked toppy. Nice pullback today. What really looks toppy is the 2-hour chart. Here's the 2-hour chart of KRE. So take a look at this beautiful MACD divergence here. All right, beautiful MACD divergence. So if you're looking for a pullback play, there you go. Chart 52, here's transports. Remember, they had a nice rally up to the supply zone, but then, if you didn't take profits, they got smacked down. This is your kind of a weak support zone. If that gives away, then this could let loose to the downside. Chart 53, here's real estate. Like I said, this and home builders are quite strong. Here's the home builders. Again, there is some RSI divergence up here, but very strong. Otherwise, again, these have been moving up, anticipating a drop in interest rates, okay? So they're kind of front running that, by the rumor, basically. Chart 55, XOU utilities, still holding up well, still looks pretty strong here. 71.80 is your resistance. Chart 56, here's XLE. Steve redrew this over the weekend, kind of a coil forming. This area is holding up much better than crude oil, which is quite weak. Chart 57, here's oil services pulling back. This is the weekly chart. It's got a big weekly coil, as you know, one I've been monitoring longer term. And here's the zoomed out view of oil services. You can see this big multi-year coil forming. Chart 59, here's FXI, that's the Chinese market. Kind of watching this area so far. We've had a nice correction here, kind of a three-wave pullback. There's a big support zone down here. Chart 60, here's yen, that's the triple leveraged ETF for Chinese market. Back in May, this stopped at the supply zone. And you had an initial bounce off this demand zone right here, lower high. We're now down to a bigger demand zone. This could be an area to start watching for maybe a nibble long if you're aggressive. All right, moving on to commodities. Chart 61, DBC. This is the weekly chart. It's down 0.5%. Boy, now testing the lower coil trend line. It got smacked down about a month ago from that upper coil trend line. You know, if this breaks down, we could see commodities shoot to the downside. You know, weakness in commodities here may be indicative of overall weakening around the economies around the world. Again, it is at support here, so it could bounce. Chart 62, here's the monthly chart. Shows you that coil a little better here. That's quite an ugly monthly chart, or an ugly candle. Chart 63, here's DBC on the daily. So kind of this expanded coil pattern. Here, there's a demand zone down here. You can see we got into it, got a little below that lower trend line, kind of a head fake and came back. So that's your support. We'll see if that can hold or not. Chart 64, here's crude oil. Again, this is the weekly chart. So far, it's down 4 weeks in a row now. It's already down 1 3/4% this week. So still in the big weekly coil. Chart 65, here's UNG natural gas. Again, this did make a new low, but there is some MACD divergence now starting to show up and some RSI divergence, but this now has my interest with this next second low. I did play it last time on that little bounce to the 90 MA, but it has my interest right here for a potential better bounce. Chart 66, here's Boyle. That's one of the 2-time leveraged ETF. The 2-hour chart has a double MACD divergence here, so that has my interest. Next, chart 67, copper. Like I said, this is copper. The sell-off in copper here too may be also indicative of some economic slowdown, especially in China. But you know, you had a blow-off move back in May, and it's had a heck of a correction. That said, this is a demand zone down here. You have the 200-day moving average. This could be a low risk area to take a shot long if you thought it's going to bottom out. Chart 68, here's CPR, one of the copper ETNs. So the bullish view would have you have an ABC pullback. Again, you're into the demand zone. So it is a lower risk area to attempt a long with a stop. Chart 69, here's a 60-minute chart of copper. You can see some MACD divergence here on the 60-minute. Chart 70, here's DBA. Continues to weaken, leak oil. Loses this area. You have the 200-day moving average down here, another demand zone that could be a target. Chart 71, wheat. Now this is the weekly chart. It's up 0.8% today. Again, I've been pointing wheat out, this big long-term support. You got a double bottom here. You got a support back in 2020. So to me, this is the lower risk area to attempt a long bottom fishing play. Here's the daily chart. It did make a new low today, but bounced. And you have a pretty good wedge here now. Notice the MACD divergence. You have 5 waves. 1, 2, 3, 4, 5. That would be the bullish labeling. All right, guys, moving on. Here's Bitcoin. Bitcoin pulled back a little bit today, but again, you can see no changes in the pattern. You know, pulling back off this upper trend line. The bullish view is this is an ABC of a wave 4. Eventually we go up in a wave 5. If this can clear this trend line, especially that last lower high at 72,000, then I think it's off to the races. Chart 74, here's the daily chart. Chart 75, here's US dollar. Got into that demand zone, remember, and it's been rallying off of that. It's up a little bit after hours here too. Chart 76, here's the weekly. Remember, it's been in this weekly coil for a while. So bouncing off this weekly coil trend line. Chart 77, here's FXY, Japanese yen. Remember, I'm long some of this. Down a little bit today, but not much, down 0.16%. Chart 78, here's the monthly of FXY. Remember, been showing this monthly chart, this beautiful monthly wedge. Nice move up in the wedge. Again, wedge has everything. You have 5 waves, you have MACD divergence, you have RSI divergence. So I'm long a little bit, and I have a stop at the lows. If it breaks the wedge, I'll add to my position. Moving to precious metals, chart 79, here's gold. Gold up today. There is a demand zone here. Steve doesn't have it on the chart here, but we bounced off this support. Chart 80, here's the ETF into that demand zone. Chart 81, here's silver. Down a little bit today. The bullish view has this as an ABC type pullback. Again, it may not be done. You also have the 200-day moving average. But guys, if you went long silver earlier in the year, if you took profits, let's say back in May or even at that July highs, and you've avoided this downtrend, but you're bullish on silver, this could be an area to start nibbling. Chart 82, here's the monthly view of silver. Like I said, we had a beautiful coil breakout in March. We'll pull back a little bit, but long term, I'm targeting much higher prices for silver in the longer term. Chart 83, here's GDX. Again, slightly up today. No real changes in the pattern. Chart 84, BPGDM. It's still stuck up here at 89%. So, concerns me a little bit for the stocks. Finally, guys, moving to trade ideas. Chart 85, STVN. This is one that I put out a while back. Was a great trade from that higher low. Again, meant actually to remove this. Now, if this can form a higher low, maybe this can form an inverse head and shoulder pattern. Chart 86, here's NVIDIA. So far, we have a 3-wave pullback. There's a demand zone here, but has yet to bounce. Earnings is not anytime soon for NVIDIA. As you know, it kind of trades on its own schedule. Chart 87, AMD. Again, AMD is down into this demand zone. There is earnings tomorrow. Chart 88, PACB. Remember, I put this out a couple weeks ago. Around this break. This is a great buy in that back test of that trend line. And you got another level here if it can clear this 225 area. Chart 89, here's YY. It's been on the list for quite a while. It's still flagging, still holding up, still holding that 20-day moving average. Again, it needs to clear this downtrend line on a closing basis. Chart 90, here's MDGL. Honestly, I may remove this one. It's still trading around in this range. Chart 91, NYCB. That's that regional bank. Now, got a nice base here, but again, it's just one I'm going to monitor, especially if it needs to come back. It needs to ultimately break through this 12 area. Chart 92, CMP. Little triangle pattern. Again, guys, as I stated, I could hardly find any good trade ideas, especially long. So really didn't want to muck up things here and add a bunch of stuff. Here's McDonald's bounced today. And honestly, their earnings were pretty crap, but it bounced anyway. Doesn't surprise me, though, guys. I know a lot of people aren't going to McDonald's anymore because they don't want to spend $15 for a quarter value meal when you used to buy them for $5 and $6. Crazy inflation, quite honestly. Chart 94, APPS. Here's another little trade idea. Again, this is all the stuff I can find, guys. These little bitty low price stocks. All right. And the final one, chart 95, our Carvana. Honestly, this kind of has a head and shoulder pattern, but the problem is you got earnings on July 31st. So it's going to go either way. It's either going to go up, be a hero, or it's going to bust down on earnings and be a zero. All right, guys, that'll do it. We'll see what happens tomorrow. Quick check on futures. ES futures are down about 11 points, and looks like gold's up 1 point. All right, Have a wonderful rest of your evening, and we'll see what happens this week. Take care.